Hi, my name is Brianna Granchelli, and for this project, I'm going to be analyzing Nike. I chose Nike because it's a well-known global company, and I felt like it would be easier to understand and apply financial concepts to a brand that most people already recognize. Nike is a non-financial, publicly traded company, which fits the project requirements perfectly, and it has a clear financial data available online. In this presentation, I'll walk through what Nike does, its main financial goals, a realistic agency problem, and some key financial numbers and ratios, as well as my overall thoughts on the company. Nike operates in the athletic apparel and footwear industry. The company designs athletic shoes, clothing, and equipment, and is known for brands like Nike, Jordan, and Converse. Nike sells its products worldwide through its own stores, online platforms, as well as third-party retailers. The company focuses heavily on innovation, branding, and marketing, which is also a big reason why it has such strong customer loyalty. I chose Nike because it's a market leader in the industry, but it's also a company that has faced recent challenges, which makes the financial analysis more interesting and realistic. The main financial goal of Nike, like most corporations, is to maximize shareholder wealth over the long run. That means increasing the company's value, not just focusing on short-term profits. A realistic agency problem at Nike is the conflict between managers and shareholders. While managers might prioritize decisions that benefit them personally, such as expanding operations too aggressively or avoiding risky but profitable projects, instead of focusing on what's best for shareholders. For example, executives might invest heavily in projects that increase the influence or job security, even if those projects don't generate strong returns for those investors. One way Nike can reduce this agency problem is by tying executive compensation to performance metrics like stock price performance, profitability, or return on equity. This helps align managers' incentives with shareholder interests because managers benefit when the company performs well. Looking at Nike's most recent financial statements, the company generated a large amount of revenue, showing that demand for its products is still strong. However, net income has declined compared to prior years, which suggests that rising costs and operational challenges are affecting profitability. Nike also has a strong asset base, meaning that it owns valuable resources like inventory, brand value, and distribution networks, but at the same time, it carries significant liabilities, including long-term debt and other obligations. Overall, this tells me that Nike is financially stable but facing pressure. The company is not in financial distress, but it does need to manage costs carefully and improve efficiency to protect profits going forward. One liquidity ratio that I looked into is its current ratio, which measures Nike's ability to pay short-term obligations using current assets. Nike's current ratio is above 1, which suggests that the comfortability meets its short-term liabilities, and that's a positive sign for liquidity. For profitability, I analyzed return on assets, or ROA. ROA shows its efficiency, shows how efficiently a company uses its assets to generate profit. Nike's ROA has declined recently, which indicates the company is not using its assets as effectively as it has in the past. This doesn't mean that Nike's failing, but rather it does signal that management needs to focus on improving efficiency and controlling expenses to improve profitability. What surprised me most about Nike was how strong its revenue remains, even while profits are under pressure. This shows how powerful the brand is, but also highlights the importance of cost management. If I were an investor, I would still consider Nike a long-term investment, but I would be cautious in the short term. I'd want to see improvements in profitability and operating efficiency before I feel fully confident. As a financial manager, I would closely monitor margins, inventory levels, operating expenses, where these areas will be critical in determining whether Nike can return stronger financial performance. Overall, Nike is a strong company with a solid fundamentals, but it needs disciplined financial management to maintain long-term financial shareholder value. Thank you for watching.